Toronto condo prices are down, rents are reaching all-time highs, and developers are pulling the plug on future projects. So what's really happening in this market, and more importantly, how can you benefit right now? Should you even be doing anything in this market? Hey guys, I'm Fred Tam, and today we're breaking down the Toronto condo market in 2025 with insights backed by the most current data, market trends to watch out for, and 3 predictions that could save you or even make you tens of thousands of dollars. Whether you're a buyer, investor, or just trying to time the market, stick around. This year could be a once-in-a-decade opportunity. First, I want to rewind to 2024 for a minute because understanding the past 12 months sets the stage for what's coming next. At the start of last year, the average resale condo in Toronto was selling for about $728,000. It only got worse as time went on, and by the end of the year, the average price fell to just under $710,000, a 2.5% drop. Not a crash, but a clear softening in the Toronto condo market. But why was that? It's easy to blame high interest rates, but there's more to it. The Bank of Canada held its policy rate at 5% for nearly the entire year. That meant mortgage rates of over 5.5%, which pushed a lot of potential buyers out of the market, especially first-time home buyers. Yet at the same time, condo inventory was going up. Over 25,000 brand new condo units were completed across the GTA in 2024, the most in over a decade. So with more listings, cautious buyers, and high borrowing costs, prices didn't go up. And in some areas, prices actually came down. This should sound familiar because that's still the market that we're in today. But what's going to be different in 2025? Let's take a look. As of mid-2025, the Toronto condo market is still soft. The average resale condo price is around $710,000, which is down by about 4% year over year. Inventory levels are up again, which is no surprise. Listings have gone up by about 12% compared to last summer, which gives buyers more choice. And more choice means more leverage that could potentially lead to a better deal for buyers. The number of sales versus the number of new listings is around 40%, which puts us in a buyer's market. But here's the twist. The rental market is actually doing really well right now. The average rent for a 1-bedroom condo is now about $23.50 a month, a 4.6% increase from June 2024. Vacancy rates are below 1.5%. So when vacancy rates are about 1 to 2%, the market favors landlords due to lower supply and higher competition between tenants. On the other hand, when vacancy rates are higher, like in the 3 to 5% range, that's when the rental market favors tenants with more rental options. Renters are in tougher competition these days, and that's starting to catch the attention of investors who backed away from the Toronto condo market in 2022. So on one side, we've got a slow resale market, and on the other, a hot rental market. That actually doesn't happen at the same time very often, and it's a sign that things might be about to take a turn. Renters are faced with higher rent prices and are now thinking maybe it's time to buy instead since prices are low and it's better to catch on before prices go up again. Let's talk about the big things that are shaping today's market. First one is interest rates. They're finally falling. The Bank of Canada made its first rate cut in June last year, which was only by a modest 25 basis points, and this lowered the overnight rate to 4.75%, and it's come all the way down to where it's at today at 2.75%. We should expect to see 2 more rate cuts before the end of this year. These could be either in July, September, October, or December. Fixed mortgage rates are slowly coming down. Anyone who's thinking that interest rates are close to rock bottom are probably going to get a fixed mortgage rate. Anyone who locked in at a fixed mortgage rate in 2021 still hasn't seen their mortgage payments change if they locked it in for 5 years, whereas some people have seen their payments more than double in the last few years. A fixed rate was over 5.6% earlier this year to around 5.1% today, with the expectation that this will come down to somewhere around 4.5% before the end of this year. If you're a buyer waiting for affordability to improve and for prices to come down, this could be your signal. But falling interest rates also means that competition is going to come back. The second thing is that immigration is still going up. Canada added over 1.2 million people in 2024, with a large amount of those people looking to stay in the GTA. Most newcomers rent, but a growing number are buying sooner than expected, usually high-rise condos. There's an estimate that Ontario needs 1.5 million homes by 2030 to meet the demand that we're expected to see. We're falling dangerously behind on new home construction, which, by the way, is more expensive than ever. And with buyer demand only growing, this gap is almost guaranteed to fuel rising home prices sooner than most people expect. Don't say I didn't warn you. The third thing is construction is slowing down. Pre-construction developments have also dropped. Only 8,000 new condos condo units launched in 2024. That's down by more than 60% from 2021. Developers are still hitting pause on several projects because of higher borrowing costs, higher construction costs, and weak investor demand. And here's why developers are interested in the investor community. Between 2016 and 2022, investors made up around 60% of all pre-construction condo sales in the GTA. In some years, especially peak periods like 2017 and 2021, that percentage reached more than 65% in certain projects. That's like saying for every 10 units, 7 of them are owned by investors. And with fewer investors buying, we're seeing even less new condos getting built. But once more people start looking into buying again, there won't be enough listings. That's what could quickly push prices up. Let me ask you this, if you had $100,000 right now, would you buy a condo in Toronto? Or would you wait? Or would you not bother with the condo market at all? Drop your answer in the comments and share your thoughts on how you're thinking about the market. Alright, so now let's look at who's actually buying condos in 2025 and also why. Buyers haven't completely disappeared, but they've definitely changed how they're approaching the Toronto condo market. First-time buyers are focusing on entry-level condos under $650,000, especially near transit and university zones. Not a bad idea considering how much more affordable they are today compared to just 3 years ago. Investors are also starting to limp back into the market. I'm seeing more condos these days being purchased, only to be rented out just shortly after the new owner takes possession. This means two things. Investors are starting to think that prices are low enough to get back into the market, and they're also speculating prices to go back up. They have more opportunities for finding cash flow positive properties. When you've got some condos in the city that have fallen by more than 20% in market value over the years, that's a sign of opportunity. There's also a trend that I'm seeing where parents are buying for their kids. With rent rising fast, some families are actually opting to buy condos in downtown Toronto, like near U of T or Ryerson. They're buying them as long-term investments for their children, extended family, or even their own retirement planning. So while the market feels quiet, we're still seeing strategic condo purchasing. Okay, so now you've seen the trends, so now here's my 3 predictions for the rest of 2025. Number 1, prices will stabilize by September. Prices will likely stay flat throughout the summer but start climbing up again in the fall, especially in downtown Toronto. By Q4, we could see 2 to 3% gains in popular areas like Liberty Village, Toronto Waterfront, and Midtown. Prediction number 2, rents will be higher. I expect 1-bedroom condos to rent out for about $24.50 a month on average by December. That doesn't include things like utilities, internet, and other living expenses. Demand is strong and purpose-built rental supply isn't keeping up. This creates a major upside for investors, but makes life tougher for renters. Nearly half of Toronto households are occupied by renters, and that number is still growing as more renters replace would-be buyers. Prediction number 3, pre-construction will stay frozen. Don't expect a new wave of pre-con launches until at least mid-2026. That future inventory gap will quietly drive demand back in the resale market, just as interest rates fall down and buyers return. And that's a perfect setup for price appreciation in 2026 and 2027. So here's what I'd say depending on where you stand. If you're a buyer, this is your moment. You've got options, negotiating power, and interest rates all on your side. This trifecta of a combo won't last forever. If you're a seller, price your home smart and leverage marketing that's working in today's market. Properties that show well and are priced realistically are still moving, even right now. And if you're an investor, rents are rising and cap rates are getting better. Cash flow opportunities are coming back, especially in older underpriced buildings with low condo fees. The Toronto condo market is still shifting, and the people who understand the timing and trends are the ones who will come out ahead. So what's your next move? Are you buying this year? Selling? Still sitting on the sidelines? Let me know in the comments. I reply to everyone, and if you want to talk strategy, I'd love to help. Set up a meeting with me. My name is Fred Tam, and my goal is to provide you with the best real estate tips to help you reach your real estate goals. If this video gave you clarity, insight, or just made you think, like the video, subscribe to the channel, and share this with someone. New videos are coming out all the time. Thanks for watching, and I'll see you in the next one.